Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
How to deal with both this from a market point of view. Nilesh Shah, Managing Director, Kotak Mahindra AMC, joins us on the phone line. Good morning, Nilesh. First of all, this limiting of the FII trading window, I mean, how does, as an investor, how should we bother about it? For instance, in HDFC itself, HDFC Bank's case itself, what's the impact on the on trades?
Lata, unfortunately, I haven't studied that in detail. It happened overnight.
Okay.
But my guess, FII will be a better person to answer this than the local guys.
Okay. What about the MSCI issue then? Even that is an FII issue, but this warning and an eventual capping of India in the MSCI index, should we worry about this as a big negative?
Certainly, it is something which we need to take it seriously. MSCI is one of the indices, but it is largely prevalent among foreign institutional investors. A lot of FII money gets benchmarked to MSCI indices, and if India's weightage comes down, then it could have repercussions on what kind of flows we can get from FIIs. Clearly, we need to take two-track approach, one with MSCI, and second, people who influence FII, people who influence MSCI, wise all the FIIs who are investors in India. With respect to MSCI, we need to point out that there is no other country in the world, including in their own universe, where the largest bank, the largest insurance company, largest FMCG company, largest auto company is owned majority by foreigners. If this is not giving access to FII, then what is access to FII? Second, we also need to bring to their attention that in 2013 crisis, China restricted foreigners from selling if they were owning more than 5% stake in the company. There were restrictions on repatriations. Even today, a foreign mutual fund cannot set up a shop in China. They'll have to wait till 2022. Now, if this is not considered restriction, then how can you blame India for restricting foreign capital where mutual funds are operating since probably 1990s? Or we have never restricted people from taking their money out. And there are instances of companies like Daiichi selling $2-3 billion of stake in a single day and taking their money out. So we need to engage with MSCIs to bring out what we have done and ensure that they treat us fairly.
Oh, absolutely.
The second,
Nilesh, just a follow-up to that. So India's weightage now is about 8.5% in MSCI. And if there is a cap for that weightage, what do you think it would do to the flows in the near term? And what's your own sense? Do you think this is just posturing, or would there be a real risk to flows?
We need to take it seriously. Even it's posturing, we need to ensure that we take a reasonable protection against it. My guess is that many of the active fund managers will remain overweight India for the growth potential we offer. But there are lots of ETFs which have no option but to follow MSCI indices. So we will end up immediately, losing the flows from the ETFs. In fact, they may have to redeem if MSCI reduces our weightage. And there is no fundamental reason why MSCI should reduce weightage. And hence, we should make our points very clear to them. Hopefully, they will listen to us. And the second track which we have to do is to engage with foreign institutional investors. Because in this consultation paper, the decision maker is FII. So people who are overweight India, people who want to invest in India, people who have a positive view on India, we should reach out to them so that they can tell MSCI that, look, it doesn't make sense to exclude HDFC Bank from MSCI indices when almost 74% of their ownership is with foreigners under the garb that FIIs cannot buy HDFC Bank. They can, of course, buy from another FII. Show me one American bank, show me one European bank, show me one Chinese bank, show me one Australian bank where 74% is owned by foreigners.
So, Nilesh, when you say we should reach out, what do you mean? I mean, are you trying to say that Indian exchanges should sort of reach out to MSCI to avert the situation? I mean, what should be the next step now?
the V includes Indians. Obviously, it should be led by SEBI, then exchanges, and then all of us in our individual capacity. Sonia, you will be knowing so many foreign fund managers. Just reach out to them and tell them that this is how you need to present to MSCI.
No, Nilesh,
why should always government do things? As Indians, don't we have a duty?
Nilesh, our problem is a little more short term. As this scrap goes on between, MSCI and Indian exchanges, in the meanwhile, will this be an overhang? That is the limited point. We don't know how this fight will end. It's possible it will end in favor of India and MSCI sees reason. It's possible it happens the other way around. Is this an overhang for now?
No, it is not an overhang for now because they have issued a consultation paper. People have to give feedback by November 18, and they will give their decision by December 18.
Okay.
No ETF is going to do a trade in anticipation of a change. They will always do the trade post-change. Okay. And if we can build the momentum among FII, which goes and shows to MSCI their irrationality of excluding HDFC Bank from the indices, which is India's largest private bank, it just doesn't make any sense.
Okay.
So we need to go out to all the people who can influence MSCI and at the same time engage with MSCI and ensure that they also realize the irrationality.
Okay. All right. Nilesh, just before we let you go, the other issue that we were discussing this morning is the slew of NCLT resolutions that's taking place and the impact that this would have on corporate lending banks. Are you of the opinion that corporate-facing banks could perhaps see an up move because of this?
Temporary, there might be up move like in many of the NCLT companies itself we have seen. But in reality, the losses from the power sector are not yet fully discovered. And the resolution which is happening is in one or two cases, but it doesn't mean that all NPAs are fully provided for. So our expectation is that over next 2-3 quarters, there is still some pain of NPAs left. It will get sorted out over next 2-3 quarters. And in that period, market for corporate-focused bank should make a bottom.
Okay.